Basically, welcome everyone to the stock market trading course, this basics of stock market for beginners course. And if you have any issues, any questions, I am ready to take it. So please do put it in the screen, whichever you have, probably on the right or the left. You'll have a chat screen where you can enter your. So let's jump in and let us now begin the stock market for beginners session 2. So let us see what is there in this basics of stock market for beginners session 2. Let us see if this is the introduction, whatever we are actually looking at, we actually have the greatness in this particular session, which I will be covering. So I am sure that you will be swept off your feet because I'll be covering a lot in today's session. And let us jump into basics of stock market for beginners session 2. This is your host and host Ashok Kumar, and let's welcome everyone to the basics of stock market for beginners on my channel Exotic Investment. If at all you have not subscribed, go ahead and subscribe now. Let us jump in. This is the head on introduction to learning the basics of stock market. Don't be left behind. Learn the markets and start the interesting journey to make money with the stock markets. So if it is your first session, go to Exotic Investment YouTube channel and subscribe right now. So if you have subscribed, let's go ahead. And today's content table is we'll touch base on these topics in today's session. That is, who are the regulators of the stock markets? Why are they required? First of all, are the regulators really required? Why are they required? Who are the market participants? And what is market capitalization? Market capitalization is huge. A topic in altogether. I can probably make a whole video about it. However, we'll cut it short and we'll drop each and every point of market capitalization in this session. Market capitalization, what is it? And what is the importance of market capitalization? And the types of companies as per the market capitalization. And how does it affect the share price? So share price is very important, right? So we had already seen it in the last session. So how does it influence the share price, and what are the types of companies as per the market capitalization? Yes, of course, the market capitalization actually goes a long way, right? So if at all we happen to go to the market capitalization in turn, as I already mentioned, as a big video in itself. I'll make a video about market capitalization if you're very much looking through, if that is the case. And let us jump in to understanding market capitalization method and types of companies as market capitalization affect the share price. How does market cap affect price, and what can affect the company's market capitalization? How much money can I make with the investment in a stock market? So let all we can cover in today's topic, and let us jump in first of all. Okay, so an investment in knowledge pays the best interest. Benjamin Franklin has mentioned this. Yes, of course, investment in yourself, to learn it, to inculcate it, everything accordingly makes you the lot of money which you are actually looking for. So invest in the knowledge, and this is for sure free. Whatever you are getting here, just inculcate it into your life, and your life will be great enough. Okay, that being said, let us jump into the first slide of today. So let's look into basic definitions first of all. So what are the regulators? The regulators are the bodies which actually are made up of the government bodies. Because I can't be a regulator, you can't be a regulator. provided if we are a part of the government authorities, we can be a regulator as well. However, we ourselves are not the regulators totally. Regulator is the body of the government which creates the rules for market participants. If you have to go through the SEBI rules itself, that's almost around 10,700 pages, my friend. That's not easy for you to understand. Yes, of course, it requires a lot of knowledge, and it has been going on. And SEBI is not a regulator which is started now. During 1992 itself, the SEBI actually happened to be in existence. From there, they have written the rules in order to regulate the market. And who are the market participants? Market participants just like you and me and people with lots of money, and people who are like brokers, sub brokers. There are lots of participants in the market, right? So who are the market participants and what are they? First of all, that's the basic definition, is the companies of set of companies. So the companies are set of companies that work under the rules prescribed by the market regulator. And market capitalization, what is market capitalization? As I already mentioned, I'll make a video about it, completely just about market capitalization. Market capitalization is the term used to judge the company's worth for an investor. So what is the share price? A share price is the amount it would cost to buy one share of a company. And what is the return on investment? If at all I happen to invest about 100 rupees, what is that I will get back as a profit? That's the return on investment, right? So what is the amount of profit you can make with the investment of your money is return on investment. So things to know are mainly market cap, and the next thing is return on investment. That's the main thing what we'll be looking at in today's basics of stock market for beginners session 2, right? So regulators of Indian stock market, who else is there? So who is the regulator of the stock market of India? And that is the Securities and Exchange Board of India, that is SEBI, who is the regulator of Indian stock markets. SEBI was formed in 1992, regulating and deregulating anything to be implemented in the Indian stock markets. The purpose of SEBI is to promote the development of the stock exchanges, protect the interest of individual investors. Yes, of course, individual investors like me and you. If any is coming out of Infosys or any other stock or any other company itself, and someone buys about 1 lakh shares of Infosys, it will just go up all of a sudden. However, that's called as trading, insider trading, and that is a fraud. And that's the reason SEBI is there, to protect the interest of individual investors and to regulate the activities of market participants and functional and financial authorities and intermediaries. First of all, there are lots of intermediaries, right? So there are brokers, there are sub brokers, and there are discount brokers are under the sub brokers, and there are the third party NBFCs, which actually take the money from the stock brokers. Okay, so those are the dignitaries and intermediaries available in the stock market. All those have to work under the framework of SEBI. Why is SEBI required? SEBI regulates every tiny detail of Indian stock market. For example, like the timing of trading or investing. For example, if the market has to, previously market used to start at 9:45 or 10 o'clock in the morning. Okay, and that was changed from 9:45 or 10 o'clock in the morning to around 9:15. to 3:30 in the morning, right? So that is the stock market. The trading timing and everything is according to the stock market regulator Sebi. Everything is controlled by Sebi. Some decisions that Sebi has the authority to circulate are, there are a lot more than whatever I have actually shown here, because I don't want to bore you with the theory. In the next session, we'll be going into the technical analysis, which is the gist of the stock market, about how to trade and how to invest. Okay, so let's jump into that very soon. I don't want to bore you with the details. So some key points of sebi's authority where it can regulate are: timings of trading. Deposits are required for brokerage firms to open an account with exchanges. What are the deposits that's required? Entry and exit load of mutual funds, and capping the limit on particular stocks. For example, if the market went up, for example, there was a limit on Quest Corp. Quest Corp is RP Sanjeev Goenka company, where you may see that Amazon, Zomato, so many people actually deliver, right? So those are not the direct employees of Zomato or Swiggy all of the time. Quest Corp actually supplies the people who can deliver or who can do the work for the company itself. Okay, so Quest Corp was around 500 or 600 rupees when the market actually went to a standstill at the time when in March 2019 there was a lockdown, right? At that point, Quest Corp actually completely shut down its operations because there were no people on the ground at that point of time. So Quest Corp's shares started jumping too heavily down. At that point of time, SEBI actually regulated that Quest Corp can't fall by 5% or move up by 5%. On one day itself, there was probably around 20-25% of loss. So it can't go up or down by 5%. That is called as a circuit breaker. So when it goes up to 5%, it stops. When it goes down to 5%, it stops. Right? Almost about 20 days, Quest Corp had completely gone down 5%, 5%. From around 600 levels, it went up to around 180 levels. So around 230, I picked up Quest Corp. So I still hold it. And capping the limit, as I already mentioned, for example, Quest Corp, they are forcing the stock market to stop in case of national emergency. On cases like there is a huge terrorist attack, or anything like a person who is something like the 26 bar 11 when it happened. I really don't want to mention what happened on that. Anyways, 26 bar 11 incidents or 9 bar 11 incidents or something like that. If something happens like that, then the SEBI will force the markets to stop. Why is SEBI required? As I already mentioned, there are so many things more. Allotting the market holidays, it foresees the acquisitions and mergers of the companies. Yes, this is very much important. So, for example, if company A is buying company B and company A is listed in the stock market, SEBI has to clear buying of company B. Then only the company A can actually buy it. It regulates insider trading, as we already mentioned, it's a fraudulent trading method. And SEBI also has many educational practices to keep the traders and investors of India knowledgeable. SEBI has so many educational things going on. Every now and then, we'll see that SEBI is giving education to the investors or the traders, something like you and me, and always they keep on updating us about the frauds or anything which happens. So why who are the market participants, and lots and lots of market participants. This is not the huge list which I can actually put up here. However, I have tried stockbrokers, sub brokers, portfolio managers, investment advisors, share transfer agents, bankers, merchant bankers, trustees of trust deeds, registrars, and underwriters, and other associated people with the stock market to register and regulate their work. Because I can't put a whole list over here. That's the reason I have put about 10 and added other associated people. That's it. All right, these are the market participants. These are the people who have a hand in the market so that the shares or stocks may go up or down, or they can influence the share price. If you have or suggestions about the basics of stock market for beginners, live webinars, please do comment below, or please do send me a mail which I'll give it to at the end. And if you have not liked this video, please go ahead and like it, and don't forget to subscribe to my channel and click the bell button next to that, so that you get these notifications all to yourself on YouTube. Or if you want to subscribe to the email where you will get these notifications automatically in your email, do click on the second link. I suppose I have put the link in the description below, where you can actually take the notifications right in your email. And what is market capitalization? Market capitalization means that the value of the publicly traded shares of the company in the secondary market. Yes, secondary market is discussed a lot in the slides. Secondary market means they are stock exchanges. Okay, simple to put it up, secondary markets means stock exchanges where people can buy and sell the stocks together. So now we have termed another unknown word called as secondary markets. Basically, secondary markets means stock exchanges where people can buy and sell the stocks. I will go into the secondary markets deep, because technical analysis needs your information about secondary markets a lot. Market cap, so the share price into the number of shares traded in the secondary market, that is the stock exchanges. So whenever the market cap is discussed, then the share price happens to be the share price happens to be multiplied with the number of shares which is in regulation in the secondary market, that's the stock exchange. So that's what is called as a market cap. For example, number of shares traded are 1,000 for company A. The current price of the share of the company A is 100. Then the market capitalization of company A is 100 into 1,000, which is market capitalization of company A is, drum rolls, 1 lakh rupees. Okay, let's go deep into the market cap in the next slide. What is the importance of market capitalization? Market capitalization is a measure of what the stock market measures the company's market value is. It's a key component used to measure the company's valuation when the company goes through mergers and acquisitions. For example, very recently, Byju's was mentioning that their market capitalization is $28 billion. However, uh, a company called Pruders or something, which is a German company which has invested in Byju's at $538 million, and they say that their valuation of 538 million is just around $578 million as of now, which means that Byju's is now valued at $6.2 billion. That's what they mentioned. It determines in the particular company stock has eligibility to be added to the stock exchange index or not. So, for example, according to market cap itself, the sorry, Nifty or Sensex actually picks the stocks according to market capitalization. Higher the market cap, higher the weightage given in the index. For example, Reliance is the highest market cap in India, and that's the highest market cap in the Nifty as well. So, what is the weightage given for the Reliance? Reliance weightage is given at 10.2%. For example, if Reliance goes up by 100 points, then the market actually, that is the Nifty, actually goes up by 10.2 points. So that's the weightage given. So according to the market cap, the indexes and the stock exchanges list the stocks. In case of the particular company, the share is added to an index and the market capitalization determines how much weight the index weighs for the company's share price movement. As I already mentioned, Reliance has a weightage of 10.2, means 100 points move on Reliance will give 10.2 points move on Nifty. So market capitalization calculation method. Previously, there was something. There was a different float. That's the market float. A calculation method. Now it is the free float market capitalization. So what does that mean? Is the float is the number of shares issued for the trading by for the general public. So first of all, free float method calculates market capitalization and it excludes locked in shares held by the corporate executives and the governments. So, whatever is available in the stock exchanges to be traded, those are the only things which will be calculated according to those shares which is available to be traded into the shares. Number of shares is the market capitalization, sorry, into the price of the share. So that's the market capitalization of the company as of now. Basically, the free float method means that it only takes the shares in circulation on exchanges. Knowledge has power, it controls the access to opportunities and advancement. So, Peter Drucker mentioned this. See, guys, knowledge is everything. However, knowledge is queen and action is king. Just go ahead, subscribe to this channel so that you can get lots of knowledge of stock markets. That being said, this is not just subscribing. You have to inculcate this knowledge, whatever I'm giving, in your daily life to understand and make money out of that, because action is king here. So go ahead and like this video if you have not yet. Types of companies as per the market capitalization. There are three different ways of market capital companies. However, there is one more which we can probably put up. Those are called as mega cap companies. So whichever has the valuation 20,000 crores and above, those companies can be called as the market capitalization companies. Okay, all right, so that's it. Companies with MCs above 1,000 crores are often referred as mega cap companies. Valuing a company, there are stocks that investors can choose from. So stock that investors will invest are large cap stocks, mid cap stocks, and small stocks. So large cap stocks are some stable business groups. For example, Reliance and the Infosys, TCS, and Capgemini, and big blue chip companies are the large caps, which are about 100, I think 100 crores. Sorry, 1,000 crores. So mid cap stocks are the ones, a company that has shown some growth and is reasonably stable. Those are companies which are above 100 crores and below 1000 crores. And small caps, 100 crores valuation, the company lowest market cap of all. How does it affect the share price? Of course, market cap won't affect the share price, but it influences in a different way. So, market cap does not influence the share price, it works the other way around. Market cap is arrived at by multiplying the share price by the number of shares in the stock exchange. So, when stock price rises, so does the market cap. How does market cap affects the index price? Of course, the same answer, market cap does not influence the index price, but the market cap is the main criterion of the weightage given to the company in the index. So, to be very straight, higher the market cap, higher the weightage in the index. So, in turn, as the value of share price increases, the value of market cap increases, and in turn, the index value also increases as per the weightage. So Reliance has the highest weightage. I have written a big article about market capitalization. If you require, I can put it in the description below, and you will have lots of knowledge about it. Reliance has the highest weightage as per the market cap of 10.2% in Nifty, meaning if Nifty share rises by 10, Reliance price rises by 10, then Nifty price rises by 1. What can affect the company's market capitalization? Yes, lots of things. When the demand for stock exceeds the supply, the price rises. If the demand for stock is less than the supply, the price will go down. Sorry. Our Indian stock exchanges, BSE and NSE, have algorithms that determine prices based on the trading volume, and these prices can change very rapidly. Significant changes in the values of shares and number of stocks issued will affect the market capitalization. Each exercise of a block deal, because block deals are usually traded from the people who hold the company, those are the founders, are the people who hold a big chunk of the company. And when the block deal is done, it is done at a lesser value than the share price at the market. So when the block deal is done, it reduces the value of the company by some value, because it increases the number of shares in circulation, and it decreases the price of the share. So the market cap uh, actually gets affected at that point. Market capitalization usually does not change due to the stock splits or dividends. So basically, how much money can I make with investment in stock market? It's very straight question. And yes, I wanted to answer this in today's session because yes, so many people come into the stock market to make money, but 95% of the people don't make money. It's a very well said quote by Mr. Warren Buffett. About 99% of the traders get to be investors on the second day, because when you hold it more than one day, you're not a trader, you are an investor, right? So people actually invest in stocks and hold it for a long term, because the stock went in the different direction whatever they have purchased. So that being said, the market actually is not very good enough for the beginners. Yes, of course, you may have the luck in the beginning, which is called as the beginner's luck. However, you will lose it all if you don't have the knowledge. As I already mentioned, knowledge is queen and action is king. You have to take the knowledge and apply it so that you can make a lot of money with stock markets. So, well, the earnings can go up to 100% or more per annum if you have the right knowledge, or even higher if you are skilled enough. and your strategies are in place. Returns on investment can be 2x if you have correctly picked the right stocks. Yes, we will talk about the multi-bagger stocks in the investment part, and in the trading part, we will talk about the technical analysis probably in the next session, in the next Wednesday session. So that being said, stock market have usually given 12% year on year. I'll put a blog post link in the description. It is already there in the description. You can go and check the stock market returns from 2015 till date. I have given a whole report month on month, every month's stock market returns, how much it has given. I have noted till December of this December of 2022, and I keep on updating every month when the market actually closes for this particular month. I will put a note over there, and year on year it has given 12%. Okay, on every year, in if it is compounded for 10 years, every year it has given 12%. I have a blog post on stock market return by month on month, and click on the link in the description below. I put the link in the description. So if you have to read this quote, if you want to get rich, invest in index funds for long term. See, trading or investment is according to your own thoughts and whims and fancies as well. However, this is told by Mr. Warren Buffett, who was the richest person in the world. So, if you have to get rich for investment of 10 years and above, just invest in index funds and you will surely make a lot of money with that. So, because you'll at least make 12%, you can't beat that 12% year on year, even by the best of the stock market gurus in this world. So that being said, in the next session, we will be looking at the technical analysis. And today, if you have any question and answers, I'll answer them. Let me through your questions. Let us see how is the response. Okay. So yes, a couple of questions, couple of comments. All right, guys. So the question seems to be uh, when I okay. By the way, this is going live on the Facebook as well as YouTube. If you happen to be on Facebook, yes, you can still type the questions. Okay. So the question is about the previous slide. Let me go back to that slide. Okay. So, if invest about 30,000 rupees, then will I be able to make enough money as of now? So that's what Mr. AK is asking. He means to ask, if 30,000 is invested, how much can I get back? So yeah, if you are trading, then I don't know. If you are investing, probably for 10 years in index fund, you can surely get 12% year on year. That's it. So those are the questions. I did not have any questions and comments today much. So only comment was that, only question was that. And if at all you happen to like this session, please click on the like and subscribe to my channel. Hit the bell up icon, and you'll get notifications. And if at all you need notification, click on the second link in the description below. And let us conclude as of now. And what in the next session with the technical analysis in the session 3. So if at all you are looking for knowledge faster, you can go to buy the basics of stock market book, which is available on Kindle, and search for the basic edition to lengthy book, 169 pages. Yes, you can go ahead and buy this, and it is available at a mere price of 79 rupees. So go to Amazon and buy the stock market for beginners. That being said, this is Ashok signing off, and don't forget to like the video, subscribe to my channel, Exotic Investment, and share this video for all knowledge needies. Happy investing and happy money making, happy knowledge gaining and happy money making.